Ich freue mich, dass gleich zwei Spezialisten von JP Morgan Asset Management hier zu uns gekommen sind. Danke an Frances Gerhold. Sie ist Leiterin des Bereichs Investment-Spezialisten für globale Produkte. Neben mir steht Helge Skibeli. Er leitet das Portfolio Management für globale Aktienfonds. Thanks for being with us, Frances, Helge. Nice to have you here at the Congress. Go Global Active is in a new economic area is the title of your presentation here in Mannheim. What are the keywords that describe the idea behind your topic?
Look, we live in a very connected global world where there are so many great investment opportunities, not just in the US that you hear about often, but around the world. So we have an incredible research tradition with analysts around the world. We have been doing fundamental research now for 40 years in all regions, and we cover 2,500 stocks globally. So we can literally go anywhere in the world with finding really attractive investment opportunities that we then put into our best ideas global portfolios. So using fundamental research to gain a real insight and using the whole universe, so we have a complete degree of freedom to go anywhere to find the best investment ideas. That's what we mean.
You emphasize the extensive resources available to a company like JP Morgan Asset Management. We talk about 1,400 technology experts working specifically in asset management, as well as 1,700 specialists in AI research and machine learning, and last but not least, an annual technology spending of 17 billion US dollars. Did you last Monday ever think that you might have be paying too much to implement AI in asset management, Frances?
Look, I think what I would say is that we are big investors in technology. A lot of what we're investing in is what we're doing in-house. You heard the number of internal technologists, our investments in our in-house research. And that investment is crucial. But let's not forget that this is moving away from an asset management perspective. It's not moving away from an emphasis on fundamental research. So we don't envisage a future whereby Helge and I don't have roles, where our roles are replaced by AI, but we're using AI and will continue to invest in AI to help us do that more effectively and to help us challenge some of the biases we might have, to help us have deeper debate about companies. So investment in fundamental research continues, as Helge mentioned, more than 80 analysts on the ground, but we are looking at ways we can use technology and research and AI to help us do that more effectively. Spectrum is a tool we launched quite a few years ago now, and it's the first thing we look at when we wake up in the morning, on the go, when we're on the road, we can see the portfolios and see research. But it really brings together everything that's available. So using technology to help us get everything in front of us at our fingertips more quickly, and that investment will continue.
You stress the clear advantages that the use of AI brings you in terms of fundamentally understanding global equities. In this context, a term, or rather an abbreviation like AI, ultimately describes an extremely broad field. Please explain to us a little bit, using 2 or 3 examples, how the most important modules behind that works.
So it comes back to data. So we have been collecting data now for 40 years. Throughout these 2,500 stocks that we cover. We basically record all earnings estimate, all cash flow estimates every day for all of these 2,500 stocks. And we've done that for 40 years. So we have an incredible data set to work with. Before we got advanced data analytics, before we got AI to really dig into this, we could do more basic analysis of our database. This has now exploded over the last 3 to 5 years. So we are able to read our own internal data in so many new and nuanced ways, but that enables us to manage money better. So it gives us real added insights. So we can look into many algorithms, many data sets in different ways, and therefore see valuations in different nuanced ways that we couldn't before, leading to new type of more insightful investment decisions. So if I think about myself, I've been managing portfolios for JPMorgan for 25 years. Today, I'm a much more informed investor because of that than I was like 10 years ago.
A module like PM Moneyball is currently still listed as in development, so to say, after its name. What added value will this module bring?
Yeah, so you saw, I would say that that's really started with the roots of our research or analyst Moneyball, which we launched a few years ago and is already being used today. And the premise behind that is, well, Moneyball, for anyone who's read the book, watched the film, the premise there was picking baseball players using something other than the regular stats that were out there, like batting average, and using data and technology to do that. So the same premise, but moving on many years and using AI to do that with our research analysts. So that's something we've already developed and we're using today. We can do it because, as Helge mentioned, we've got a process that's been in place for nearly 40 years. And because we've got analysts with, on average, 19 years industry experience, so the tenure to actually look back at data, we have that data. No one else in the market has that data. It's our proprietary data. And so we can really make the most of that. So it gives us guidance. It's in our spectrum system, and it'll flag to us, for example, is an analyst perhaps overly optimistic, too cautious in the run up to an earnings release, and that gives us a trigger to have that debate. So back to your question, PM Moneyball, the next phase, one of the tools we're looking at today is, can we take a similar premise and apply it to how we manage portfolios from a risk management, from a portfolio management perspective? Can we develop tools that help us understand the accuracy of our stock position sizing, etc.? So what I would say is, when we put together tools, we really crucially want to bring together some of those technologists, those AI experts you mentioned, but also with our investors. So we develop them in smaller groups so that we can really develop tools that are applicable in portfolios. And that's what we're doing with PM Moneyball today. So something in development that we may be using in portfolios more in the future, but obviously we want to be really cautious about anything before we introduce it to a portfolio. What we're not looking to do is change the underlying investment process fundamentally. Like, our process is still very much based on that best ideas stock picking, but perhaps using some of these tools to help us analyze some of the data that we've got around how we size positions and manage portfolios. So watch this space.
In your presentation, you say that you are currently cautious about cyclical stocks because expectations are very high despite the recent price decline, but the fundamentals are not keeping pace. What do we have to understand when you say that in this situation you are looking selectively for high quality stocks, and where do you find them?
Great question. So when we select stocks, we think about two things. What is the valuation looking like, valuation on our own long-term forecast for earnings and cash flow? Second, how do we think about the outlook? Do we think it's going to be a very good earnings outlook, or do we think there are issues going on so the earnings will go down? So those are the two big things that we look at. For cyclicals, they're coming off, I would say, COVID high, where volumes were high, pricing was great, and they over-earned. That process is still in works. So pricing is coming down in many cyclical industries, volumes are coming down, so the top line is going much more slowly. So therefore, we think that many cyclical industries actually will have negative earnings for a while. So we are sort of in an earnings recession for cyclicals. The market has taken a different view, and the consensus view is that earnings growth will be really good throughout 25, and that things will be fine for cyclicals. So we have seen cyclicals outperforming defensives. Defensives, on the other hand, think healthcare, think consumer staples, think utilities, have much less earnings downside, and the valuation has now drifted in favor of defensive, and we find great quality companies in that defensive area. So therefore, for the first time in 5 years, we have skewed our global equity strategies more towards defensives than cyclicals.
It's not to say, though, we're not finding opportunities in cyclicals, right? We're stock pickers, and in any area, there'll be companies that really stand out to us. And, a good example standing here in Mannheim today, where the first elevator was created. If we think about Otis, a service of elevators, escalators, the company manufactures them and services them, and is traditionally maybe in a more cyclical industry, but as a company that can look quite interesting to an investor on a global basis. They've got strong presence across Europe and the US. Many of the competitors are heavily concentrated in China and the rest of Asia. And also they're really positioning their business to not only be about new development, but servicing those existing elevators and excavators. So we think that there are interesting opportunities in cyclicals. We just want to be really selective about what we buy.
I can, of course, not let you go without asking you about the recent development, your reaction to a development that caused a stock like Nvidia to lose 18% in one day, and the other day had a rebound of its value of 8%. Where were you invested, or are you still invested?
Yes, we have a relatively modest overweight in Nvidia at the moment. Going into this, we thought Nvidia had moved up quite a lot and the valuation signal had faded, so we'd taken down our position. But we did have a position going into this. So when you get news like this, you get a lot of volatility. It creates a lot of ripple effects, and the market is asking questions. The level of uncertainty is going up and people are wondering what's going on. So I would think it's fair to say at this moment in time, there are more questions than answers, what it really means. Something that we have discussed a lot the last 2 days in our investment team is what does it mean, not for Nvidia, but what does it mean for Meta, for Microsoft, for Amazon? So we have been invested quite heavily in those type of companies, and we have issues around how much they're investing. That's where the big investing is ongoing. Will they return? Will they make a return on investment on all of the spending? And when you get development like this, is what you've seen with previous technologies being rolled out, eventually the price comes down. That's a positive. So if this is the first sign that AI is going to be cheaper for JP Morgan to buy, we're going to buy more. So for those type of companies, we think it's actually very positive. And you can see that, for instance, in the Meta stock price. It's been going up since this happened. So that type of the universe we like even more today. For semiconductor companies, we're asking more questions right now and digging more, basically.
And is DeepSeek an investment for you?
As a security, it's not held in our global portfolios.
Okay. Thank you very much for being with us.
Thank you so much. Thank you so much.
Have a good time.
Yeah, you too. Thank you.